Just to talk a bit about the December meeting for the European Central Bank. We've got a terrific piece on our website at the moment by Sylvia, just discussing whether there is a possibility at the December meeting that Madame Lagarde says, that's it, we're not buying bonds, we are thinking more seriously about selling now, and here's the programme. If that happens, do you think that potential outperformance in Europe is possible?
Well, it's going to be very difficult because indeed the ECB is facing a very tough choice here. I think that what the market is pricing in terms of terminal rate seems too low with regards to the dynamic of inflation that we're seeing. But there is also the question, as I was mentioning earlier, that the balance sheet is also an issue for a whole range of asset classes. And from the moment the ECB begins to talk about an active quantitative tightening and non-renewal of maturing sovereign and credit bonds, yes, that could trigger a bout of risk aversion on the market. So it's going to be very tricky to time this because the ECB, I think, is deeply divided, the executive board and the central bank national governors. There is no visibility really of where the political balance will go, but it will be, I think, a political decision. So economists are kind of lost to say exactly where the decision will be, but that's a key risk for Europe for sure.
Where are we in terms of fragmentation risk, Raphaël? The Italian bond curve has been remarkably well behaved since the last general election result. Is there any risk, do you think, of a breakout here as we run into next year, as Europe still struggles to find unanimity on a common energy policy?
Yes, I think there is a risk that the market is not pricing the probabilities that the ECB could be entering in 2023 a regime of fiscal dominance. And at that point, I think the switch over to this new regime will come with the market testing the credibility of the ECB's, what they call the line of defense for public debt markets, particularly in the periphery. So right now they say that the first line of defense is a reinvestment of the PEP program, and the second line of defense is the transmission protection instrument, which I think does not have yet enough credibility to protect Italy in case of the market willing to test this. So I think we will get closer to that decision moment when and if the ECB decides to announce that that's it, we're going to do a quantitative tightening program, and this is how it's going to look like.